Well, folks, today's video is going to be a very serious one. This is going to be one you're going to want to pay very close attention to. Every word I say in this video here today. This is not just another video. I have a massive warning I need to give to all of my subscribers, all stock market investors out there on kind of what's going on here, how to plan for this, and everything, right? Not sure if you guys saw UPS stock here today. What can Brown do for you? It looks like not much. The stock fell 14 plus percentage points here today. Absolutely brutal day. Look at a 3-year chart of UPS stock. This stock has nearly been cut in half in the past 3 years. Absolutely brutal. Caterpillar, the machinery giant, we can call them. Look at them here today, down about 5 percentage points. I was fortunate to not really notice a lot of the damage that was out there. Public count up around $55,000 here today. A lot of positions, very good for me. You know, Meta's up about $18,000. Tesla's up about $12,000. Cheesecake Factory even up $6,500 today. Palantir up about $5,000. It was a good day overall. Okay, I have a massive warning I need to give to all my subscribers here today. They're setting you up for a massive downfall. And I mean, it's a big one, okay? I'm going to explain how this is all going to work. I'm going to explain how to avoid this, which is going to be the very, very important part of this video here today. And as they say, with great power comes great responsibility. And obviously, I've been blessed to have, a lot of success here on YouTube and have a, really large fan base. And I'm super thankful for that. And I look at it as my responsibility to, when I'm seeing certain things, to go ahead and talk about those, warn people and say, here's exactly what I'm seeing. Here's how to avoid this, okay? And yeah, I appreciate y'all for being here. I appreciate everybody that smashes that thumbs up button. I appreciate everybody that is subscribed here to the channel. Each and every one of you means a lot, and I hope you're going to get a tremendous amount of value out of today's video because I think this is so needed, okay? Alrighty, very important we start right here. What am I showing you? Well, what I'm showing you right now is stock market charts for the NASDAQ, for the S&P 500, and the Dow Jones Industrial Average since the market bottomed in October of 2022. Now, that was around 28 months ago. And if we look, it has been an absolutely extraordinary upward move. Now, we have had some drama. We've had some volatility during that last 28 months. Absolutely, right? That's the stock market. But the moral of the story is the Qs are up 100% in the past 28 months. The S&P 500 is up around 70% in the last 28 months. The Dow Jones Industrial Average is up about 51% over that time. That is a stellar, and I mean an absolutely stellar, less than 2.5 years. That's insane, like phenomenal. It's been a banger time. If you've been in the market, you should have made a tremendous amount of money. Like, you should be up tens of thousands of dollars, hundreds of thousands, or millions of dollars. I can tell you, for me personally, I have made millions, many millions of dollars since this time frame, and I'm very, very thankful for that. Now, not only that, if you look at many of the most popular stocks at, let's call it the Mag 7, look at their performance. It's even more tremendous, right? NVIDIA stock's up about 900% since then. Meta stock's up 428%. Google stock's up around 100%. Amazon stock's up close to 100%. Tesla stock's up, 86 plus percent. Microsoft's up 71%. And even Apple, the lagger that is Apple, has appreciated 61% since that October 2022 bottom. That's incredible. Meanwhile, you have stocks like Palantir. Some folks have now 10x their money or more on Palantir stock. I'm fortunate to be up 981% on the stock. It's been an absolute game changer. And yeah, Palantir's not talked about like the Mag 7 stocks are, but let's be quite honest. It's an extremely popular retail stock. If I had to rank them, I would say Tesla's the most popular retail stock, right? And then if I had to say after that, it feels like Palantir, right? Palantir is very, very talked about stock on social media, whether you're talking X, YouTube, other platforms, very talked about, very invested in from the retail investor community that like to do stock picking, right? And it's just been a game-changing stock. There's no doubt about that. Now, here's where it starts to come into some problems, because all that making money, a lot of money, tens of thousands, hundreds of thousands, millions of dollars, it's a lot of fun, right? But here's where we start to run into problems. The first problem happens with experienced investors. These are folks that have 5 years or more of investing experience. That might be some folks watching this video. I know some of you guys have been investing for 5, 10, 15, 20, 25, 30 years, right, that are watching this video right now. What usually happens, the pitfall that happens to experienced investors is something starts to flirt with them, and it's called margin. And it's the ability to take out extra money to invest. Because sometimes what happens is if you've been investing for a while and you've been making all this money, the little thought comes to your mind about, what if I had even more money to invest? Imagine if for every dollar I was investing over the past couple years, I had another dollar to invest, right? And you start to say, man, I've made $500,000 over the past 28 months. If only I had double the amount of money, I would be sitting on $1 million of profit, right? And this is something I've experienced it throughout my 16 years of investing. It's something that comes to you, and many times it's after you've been through an epic upward move and you've made a ton of money, and you start saying, gosh, if only I had more money to invest, right? And if we look, it's actually pretty evident in the data. What I'm showing you right now is FINRA. And FINRA is showing you how much folks have as far as their debit balances for margin accounts. And we've seen it go from where we were at in December of 2023 to where we're at December 2024. And we'll see, where this month's number's at. My guess is it's going to be even higher. But we went from $700 billion of margin debt outstanding to around $900 billion. So we're talking about a $200 billion increase. Now, as the stock market goes up, and this is very important, everybody understands this point I'm about to make. As the stock market goes up, generally, it should go up in terms of how much money is out there on margin. Like, it should, right? But that's a pretty big increase of about $200 billion there, which definitely tells me there's a lot of probably more experienced folks that are looking at it and they're saying, man, I've made so much money, but I could have made even more money if I was just margining out, right? Now, if we look here, what happened at the end of 2021? We hit all-time high margin debt levels, right? All-time high, $935 billion of margin debt. Now, keep in mind the stock market is actually a lot higher today, and there's actually the market capitalization of the market in general is actually much higher than where it was back here. This just shows you exactly how extreme things were. The fact that the market's way bigger today, and we actually have less margin debt than back then. But that doesn't mean we couldn't be setting ourselves up for some trouble over the next 6-12 months if margin debt keeps exploding, right? Now look at how low we got by the time the market was kind of bottoming in that fourth quarter of 2022. We got all the way down to $606 billion of margin debt outstanding, a very low number, the lowest number we had been in many years at that point in time. Now the scariest part of this whole margin debt situation is this: the interest rates people have to pay if they're taking out margin is astronomically high right now. Back when we had $935 billion of margin debt outstanding, right? Think about where interest rates were at that time. We were talking about interest rates around zero, right? Fed funds rate around zero. It's a long way from zero now at this point in time, right? So I'm looking at Fidelity. I just was like, let me just pull up Fidelity's margin rates, right? If you have, let's say, a $50,000 portfolio, and you want to take out margin, you're paying a margin interest rate of 11%. So you need to get 11% return just to pay off the interest on that margin loan. Even if you have $1 million plus portfolio, you're still paying 8.25%. That's extremely high, right? Now I have this circle here because I feel like this is the majority of my subscribers, like the majority of people watching this video right now. You have between $25,000 portfolio and a $250,000 portfolio. My private stock group, a little higher end, so a lot of you guys are probably more in this range, right? But for the general subscriber amount, you guys are in this range. So that means if you are in that range, you're paying like 12 or 11% margin, it's not attractive, especially when you've already been in a multi-year bull cycle, because then you're setting yourself up for a lot of risk. After you've already been through a multi-year bull cycle, at some point in time, the market's going to obviously go the other way, and you're going to be stuck in a situation where you're paying this crazy amount of margin interest, and then next thing you know, you're going to be stuck with margin calls. And it happens quick. It happens very quick. And remember, a lot of the same type of people that many times take out margin are same type of people that have trouble controlling that margin. And they let things go overboard there, right? The next group that we have some major troubles, and this is actually the most at-risk group, and it's for a different reason. It's for the individuals that might be watching this video right now that you have light experience in the market. You've been investing in the market for 1 to 4 years. You're the most at risk of a major problem here, and here's why. You are in a period where we've had a very nice bull cycle, right? And when you have been in a nice bull cycle and you've probably made really good money, it can lead you to a thought process of investing is so easy, right? And I'm sure you guys know the saying, hard times make strong men. Strong men make good times. Good times make weak men. Weak men make hard times. You might have heard that before, right? You might have heard it on the channel before, because I don't think it's the first time I mentioned that little phrase there. And that's the same exact thing in the stock market. Hard times make really strong investors. For instance, when I got started in the stock market, it was end of 2008 going into 2009, right? And I'm getting thrown into the stock market where everybody's just getting obliterated. It's hard times. And so what did I focus on? I focused on the fundamentals. I found Warren Buffett. I'm like, okay, here's what he does. Here's how he invests. Oh, he's looking at the income statement, the balance sheet, the cash flow. Here's how he thinks about a strong moat around a business, right? And my whole investing thought process was really brought up in a great time, because at that time, what were you thinking? We need safe business models that are going to survive recessions, right? And so right off the bat, I was kind of like brainwashed in a very positive manner. Whereas if you come into the stock market and it's just easy to get gains, everybody's just talking about upside and upside and upside, it can lead you to become a lazy investor. It can lead you to become, put yourself in a situation where you think this is an easy game. And then once you start thinking this is easy, so easy, right? You start to say, I don't need to look at an income statement. I don't need to look at a balance sheet. I don't need to look at a cash flow. I don't need to perform SWOT analysis, strengths, weaknesses, opportunities, and threats of a business. I don't need to understand how valuations are done. I just throw some money in a stock and it goes up, right? That is so detrimental to your long-term investing abilities. It will produce you far worse results. What you will find is when the market goes down, you're going to get absolutely obliterated. And when the stock market does go up, you're going to find you're also going to have trouble getting gains over time, because not all bull cycles are like the one we just went through for the last 28 months where the NASDAQ goes up 100% and doubles up. This is a very freakish situation. Very freakish. I can tell you the NASDAQ doesn't just double every 2 years. That's not the way this works, okay? So that's the major issue, and it'd be the same. Some of you guys might know I live in Vegas, right? I'm sure probably most of you guys know I live in Vegas. So it'd be like me saying, I'm going to go down the strip. I'm going to go down the strip, I'm going to go to the casino, and I'm going to play some roulette, right? And I say, give me $100 on red. Boom, they spin it, red comes up. Oh my gosh, this is so easy, so smart. Let me do it again. Let's double up here. $200 on red. Boom, red. Oh my gosh, I'm a genius. This is so easy. Double up again. Another 200 on red. Boom, $400. Oh my gosh, how did I never know about this? This is so easy, right? Double up again. Boom, black. Oh, lost it all. This is how people think about the stock market, right? And they think like, I don't need to know this, I don't need to know that. Yes, you do. You 100% need to know all this stuff. You can get lucky in the short term, as you could go down and play roulette right now and get lucky, or go play a game of blackjack and get lucky, but that is not lasting. That is not lasting. You need to understand all this stuff. You need to understand how to value a growth stock, a dividend stock, how to perform SWOT analysis, income statements, balance sheets, cash flows. You need to understand all this stuff. You need to study business models in order to make this sustainable. Otherwise, you're just a gambler at the casino, right? And I teach you guys all that stuff in my private stock group. All those course curriculums go into all of that. And some people think, I don't need all that. Yes, you do need all that. You need all that knowledge. I can tell you, if I didn't have all this knowledge, you think I would have all this success? You think I would have all these YouTube subscribers? No, that's not the way this works, right? These folks in my private stock group, they've built out over time to become sustainable investors. These folks are able to get through the bear markets. They're able to thrive in the bull markets and scale up 6 figures, multi-6 figures, 7 figures, multi-7 figures, 8 figures now. I believe we have several people now in the private stock group that have 8 figures plus in just stocks. We're not talking net worth. We're talking just stocks, right? You got to build a sustainable path that's lasting, right? That's always linked in the description area. Many times I have a pinned comment down there if you want to apply to join us in there. That teaches you all that to become somebody that's not just a gambler at the casino and somebody that's actually sustainable, right? The next folks that have issues are the noobs. These are folks with 3 to 12 months experience, right? And what I'm seeing from this group is this group has gotten very addicted to quick money, to fast money. These folks are saying, what's the hot call options? They're focused on daily gains, like how much can I make today, right? Oh, my stock only went up 2%. Dang it. Like, oh, I'm not getting that hit. I'm not getting that dopamine high. I wanted 4% today, right? This is very bad. These folks need stocks to go up every single day. And when you start it and it's just a roaring bull market, many times the noobs can get in this thought process of like call options and what's the hot play and daily gains and like you need stocks to go up every day. No. None of that's lasting. None of that's lasting. And this is a group that gets the most easily thrown out of the stock market when the market turns the other way. And this is a group that is most easily manipulated into thinking the stock market's a scam. So what happens with this group is they get in the market, it's just going up. They get very addicted to call options and the daily gains and getting in and out of stocks and trying to make a percent a day and blah, 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 right? And what happens with this particular group is the market turns the other way. They start to lose money at a rapid pace because they're still trying to do the same things that they were doing when the market just happened to be going up every day, right? And they're playing the call options, and instead of making 20% here and 40% here, they're losing 100% and 100% and 100% and 100%. And now, instead of those dopamine highs they were getting, now they're getting the lows, day after day, week after week, month after month. And for every one dopamine high, they're starting to get 5 of those big downs. And now they're starting to be depressed. And now they start to say, the stock market's a scam. What was I ever doing screwing around with this thing? That's what happens. And so for these folks, if your brain is starting to think like, oh, what's the hot call option for the day? Like, oh, my stock only went up 1%. Why didn't it go up 3%? You're in trouble. I'm going to tell you right now, you're in trouble. And you've got to get out of that mindset as quickly as you can possibly do. As quickly. Because I'm telling you, this is a very serious matter and it gets out of hand very quickly. And I've seen it time and time again, okay? What you need to be focused on for that group, and for all groups, honestly, watching this video right now, GVD 123. This is what I call building out a great sustainable portfolio of growth stocks, value stocks, dividend stocks, and then finding at least 3 stocks of each category to invest into. The one you believe in the most gets the most money allocated to it. The second one gets the second most money. The third one gets the least money invested into it out of the bunch. But this is how you build a sustainable portfolio of growth stocks, value stocks, and dividend stocks to get you out of this mindset of like, what's the hot call to play today and what stock's going to go up the most on this particular day. GVD 123. You build an overall great sustainable portfolio to get you through the bear markets and put you in a position to thrive in the bull markets. If I look at the public account, right? The public account's going to have no problem getting through the next bear market. I don't care if that bear market means S&P 500 goes down 20% or the S&P 500 goes down 55%. The public account will get through just fine, make it out to the other side, and in the next bull market, it's going to explode to the upside and take out higher highs than we've ever seen before, right? That's the name of the game. But in order to get to that portfolio, you've got to have a good balance of growth, value, and dividend stocks. And you've got to have, if you look at the public account, I'm invested in probably 15, 20 positions, right? And you could look across my portfolios, I probably own 20, maybe 25 stocks in total, right? Very well diversified overall, right? And if I go into a stock, I don't just go all in a stock. Like I invest a certain amount of money and it's over a period of time. It's not just all in one day, right? And usually when I sell out of a stock, I sell out of it over a period of time as well, right? Let me show you something that's very important here. I need to show you math. Because math many times can hit people in the best way possible. The math matters. Here's the deal. you need to outperform the stock market in great markets and in bad markets. And I really want to illustrate this point to you. So let's say you start with $10,000, that's your initial investment, right? And you're able to contribute $700 a month toward your investments, right? So we can call that what would it be, $8,400 a year roughly, right, toward your investment portfolio. And you do that over 30 years, but you only get 7%, which is not a good return. Like 7% on average over 30 years is not a good return, especially in this day and age, right? I'm going to show you that you can't afford to lose a significant amount of your portfolio, because here's the deal. With starting at $10,000, $700 a month over 30 years at a 7%, you're at $869,000. Now, keep this in mind. $869,000, even in today's day and age, is not a ton of money. Now think about $869,000 30 years from now. Now we're in trouble. Now we're in big trouble. Because I can tell you $869,000 30 years from now is probably going to be the equivalent of what $300,000 or $400,000 is today. And that's if you're lucky. This is where you begin to understand, oh boy, percentages matter, and I need to be doing this on a high level and not screw up big time, and I need to really make sure I'm outperforming the market in the really good markets overall, right? So now we went through the same exact scenario, $10,000 initial investment, $700 a month over 30 years. But let's say you get 14%. That's a good return over time. That's not a great return over time, but it's a good solid return, 14%. Check out how much, by just changing that one number, how much it changes the math. Now we're talking about you have $3.5 million. It's insane to think about. All we changed was one number, and we went from $869,000 to $3.5 million. But let's take it a step further. Let's say you were a great investor. Over that time, you knew what you were doing, you knew how to value companies properly, you knew when to sell, you knew when to buy, you knew how to judge financial statements, all that good stuff, right? And you get just over a 20% return over time. You're a really, really good investor, if not great investor. $15 million. This is why your percentage return matters so significantly. And I was fortunate to play around with compounding calculators back when I was a freshman in college, right? Had a great accounting instructor. And he showed us compounding calculators. He's like, you guys need to play around with this and really, just kind of get in the mentality of like understanding so much of this game is about how much money can you put in, what's your initial investment, how much can you contribute on a regular basis, what's your percentage return over time, because it completely changes the math. I mean, completely changes the math. It's not like it's small differences. We're talking the difference between $800,000 and $15 million from changing one number, right? Now, if we say the public accounts averaged a return of 25.4% over the past 5 years, according to Fidelity Investments, right? So if we run math on that, same exact math, $10,000 initial investment, $700 a month over 30 years, 25.4%. Do you know what number that adds up to? Look at this. $38 million. We changed one number, and we went from $800,000 to $38,000. We never adjusted anything else other than one number. This is why your percentage return matters so significantly. Now, I also want to show you how vital time is. Because a lot of people, when they get in the market, they say, yeah, I got time. I don't need to get invested right now. Like, I'll take this stuff serious in 6 months from now, 12 months from now, 2 years from now, 5 years from now, 10 years from now. I'll take it serious down the road. I don't need to do it right now. Yes, you do. You need to take it serious right now, because time is everything in this. If we just say, let's run it on 40 years instead of 30 years, now we're at $368 million. And the only thing we change is an extra 10 years. Everybody that's watching us right now, you got to assume you're going to live to be 100 years old. You might not. You might not make it to 100. You might make it further than 100, right? I think we're going to go through kind of a health renaissance in, really in the world over this next 30 or 40 years when it comes to eating healthier. I think when it comes to artificial intelligence, understanding disease better and cancer better, all these sorts of subjects, I think we're going to go through really a health renaissance over this next 30 and 40 years. So I think everybody should plan on being at least 100 years old. When you start thinking like that, you can think a little bit longer term, right? And this is why if you're between 20 years old and 40 years old, it is so vital you start taking this stuff serious now. You can't wait. You can't wait like another 2 years, 5 years, because every year you wait, the amounts of money you will have over your lifetime diminish immensely. It's not a small amount. It's like everything. We changed a little bit, and we went from $800,000 to $368 million, right? And we never touched the initial investment or the monthly contribution. Now, if you got a good job and you can throw off $1,000 or $2,000 or $3,000 or $5,000 a month, could you imagine what our numbers would be like then? Oh my gosh, right? No, Steve Wynn, obviously legendary man in the casino business and legendary man in Las Vegas, right? He had a famous saying. He said, the only way to win in a casino is to own one. And as an investor, you can either be the player at the casino and you're just gambling money around. You don't really know what you're doing. You don't really know a lot of stuff. You don't know why a price to sales ratio matters for unprofitable companies versus profitable companies. You don't understand why forward PE matters over a trailing 12-month PE, or what that even means, or why a 2-year forward PE is so significant, and what a good growth rate would be for a company that has, if I asked you right now, this company has a 35 forward PE, and they have revenue growth on average of 11% for the next 5 years. Is that stock a good value or not? If you can't give me an educated answer on that, I could tell you we got to take you up to a higher level. If you could give me an educated response to that, you're at a pretty good place. You're at a pretty good place, okay? That's the way you got to think about that. Stop treating the stock market like it's a casino and start becoming the one that owns a casino, right? If you look at the public count, you can say, oh man, so much success, $3.2 million. I've been building that portfolio since 2018. It's 2025. That portfolio has been through a lot of drama, including the crash at the end of 2018. It went through the Rona crash. It went through the 2022 crash. It's been through a whole mess of drama, right? But at the end of the day, it takes years and years to build these things. It doesn't happen overnight, kind of like building a massive resort. It doesn't just happen overnight. It's a process, right? Now, when you think about people problems, like if I think about some of the biggest people problems out there, healthcare would certainly come as one of them. Like, oh, my healthcare is not good enough for me, my family, things like that, right? I would say the far majority of people either fall into two groups. They dislike their job or they literally hate their job, right? And, the best way to put it like this is like, if you offered everybody $5 million to quit their job, like how many people would take that? Of course, like almost everybody would take that, right? Because they don't love their job that much. Like most people might barely like their job, but a lot of people hate their job. They despise that job, right? A lot of people can't go on the vacation they want to go on. They have to compromise. They're like, man, I would really love to go on this sort of vacation, but I can't get enough days off my job. I can't afford that, right? They can never go on the vacation they want. They can't make the friends they want to make. That's another huge thing. That people just find they can't make the friends they want to make in this life, right? I can tell you, I'll speak about each of these in just a moment, right? People problems, house sucks. They're in a house that like, man, this isn't the freaking house I want to live in. Like, I want this other house. The community sucks. They're like, I want to live in a different community. The cars suck. They're like, oh, I really want this car and this car and this car, right? They can't find a significant other. All of these things end up coming back to one thing. It's money. Is it not? If you have money, you can afford whatever healthcare you want to afford, right? I'm pretty sure Warren Buffett can do whatever he wants healthcare-wise, right? If you hate your job, right, money can solve that issue. You don't have to keep working that job if you got money, right? If you can't ever go on the vacation you want, money can solve that issue. Then when you got money, you can go on the most crazy vacations that you ever imagined and see places in this world that you never thought you'd ever see in this lifetime, right? Can't make friends. I could tell you, it's a lot easier to make friends when you got money. It's a lot dang easier. And the reason being is there's a lot more people that want to be your friend when you got money. It's as simple as that. The way I would put it to you like this: when you're a guy and you got money in this world, it's the closest thing you'll ever get to being born a super attractive female. Being born a super attractive female, girls want to be your friends, and every guy wants to be your friend, right? And guess what? When you got a lot of money, do everybody come out and want to be your friend? Because you're successful, right? And, you got all the things that people want, right? They're attracted to you. They're like, oh man, like, I want to be friends with that person. I want to be living their life, right? I want to be around them. That's just the way it is. That's the way it is. When you have money, I tell you, you have no issue with the amount of people you could make friends with. A lot of people will be your friend when you got a Lamborghini. I'll just tell you that. A lot of guys are going to want to be your friend when you got a Lamborghini, right? House sucks. Well, money can fix that. Money can fix that. Your community sucks. Money can fix that. You want to live in the nice part of town? Money can fix that. Your cars suck. Money can fix that, right? Can't find a significant other. I can tell you, money can fix that if you can't find a significant other. I mean, just at the end of the day, like if you got your stuff together financially, it's just a massive turn on. And that's for both genders, by the way. It certainly matters more for men that you have your financial life together, but even for females, like, I have friends that, are single and they go on dates and whatnot, and they'll tell me these stories about this female's got their whole financial life messed up. And it's not an attractive trait, even for men, right? But I can tell you, especially if you're a man and you want to find a significant other, if you got your financial life together, the opportunities open up immensely for you. There's no debating that. Ask anybody that's got money. They'll tell you, your opportunities certainly open up immensely once you have money. So the moral of the story is a lot of these problems that people run into, it comes back to money-related things. But you have to have patience to solve these problems. They're not solved overnight. That's not the way this works. If you have this mentality of just, you just want to fix it overnight, it is not going to fix overnight. It's going to take years of grinding to get in a place where these problems will fall off one after another, after another, after another. And after you grind it and took investing serious for 5, 10, 15 years, next thing you know, you'll be like, oh, all those problems I had before, like they all went away. Now I don't have that problem or that problem or that problem. But you got to understand, patience. Patience is massive. This is something I found out when I ran track back in the day, right? I said, I don't know, this six-pack and these ripped muscles is only going to get me so far in this life, right? But something I learned in track, I wasn't always the most athletic person, but I could tell you, by putting in the work and having the right mentality, I became extremely athletic, and I was able to do things I never thought possible, like dunk a basketball and run, super fast, and like all these athletic things that I'm just like, I don't know if I was born to ever do that stuff, but by putting in the work and having the belief that I could do this, I was able to accomplish it, right? And I took that same principles I learned from those athletic days and I applied them to my life. And you can accomplish so much in this life if you have the right mentality that I can get here. I'm going to have to put in this extra work to do this and do that. But you can accomplish so much in this life. And then you look back as the years tick on, you're like, dang, we really came a long way. And then eventually you get to a place where you're like, I already won. And that's the thing with me, like, right? I want to keep winning. And so that's why I keep putting in the work and I keep studying and listening to conference calls till whatever amount of time, because I like winning and I want to keep winning, right? And I've got bigger things I'm trying to do. But I already won. I already won a long time ago. From where I came from, a community college dropout, right? A Walgreens worker making $8.25 an hour, I already won. Like the game's over. Now we're just on side missions at this point in time. Side quest, right? We're just doing extra stuff now. Like this is just for fun now. I already won. The game's over. And so you want to get to that place in your life where you can then look back and you're like, damn, I already won. Now this is just for fun now. And that's a magical feeling. When you can get to that place, I can tell you, it really hit me, some years back. It really hit me and I was like, dang, that's a good feeling. And I never even thought about that feeling. But then when I experienced it, I was like, oh man, this is pretty cool. Like I already won the game and like now we're just playing, for fun now. Like, wow, that's special. And then, keep your goals close to you. This is on my iPad. You know why this is on my iPad? Because I'm going to buy a place in this building one day. Right in that building. I'm going to buy a $20, $30 million place right in that building someday. Right there, baby. Okay? If you want, you could be my neighbor someday. You live in that building as well. And I'm not even going to live in that building. It's just going to be like an extra place for me for when I go to New York City. But it's going to be in that building right there. Got to keep your goals close to you so you know some of the things you're working toward, right? I need one thing from you guys here today. If you really enjoyed today's video, if you found this video very helpful, motivating, to keep you out of trouble, things like that, let me know in the comments section. You know, that would mean a lot. I still go through the comments. I know there's a lot of bots that leave comments, and I understand that. Unfortunately, it's just the way it is here on YouTube. There's just always so many bot comments. You can't really fight them. But, I still read through those comments. I'm able to just kind of like bypass kind of the bot ones and then see what you guys write. And if you found this video very helpful and the channel very helpful over the years, leave me a comment. I'm going to be reading through comments in this video, and I hope you guys enjoyed this. I hope you appreciate it. Additionally, this is my favorite video I recorded in 2024. This video, by the way, I'm recording right now. This is probably my favorite video I've done so far this year in 2025. But in 2024, this is my favorite video I recorded that entire year. 16 years of stock market advice in 52 minutes. If you never got a chance to watch that one, if you don't have a chance to watch it right now, then watch it in the future at some point in time. Because I think you'll love that video. I've gotten such a positive response, over time. It's incredible, okay? Additionally, if you're ever looking to apply to join a private stock group and you're ready to take things more serious, that's always a pinned comment down there. It's also linked in the description. Much love and have a great day.